Hey everyone, it's your favorite real estate agent from Las Vegas, Robert Steim. Hey, I wanted to hop on real quick because we've been seeing some news stories and I've been getting some phone calls and having conversations about couple stories that are floating out there about having bad credit and maybe that being more favorable for getting a loan these days. And it's almost encouraging you, if you have good credit, to ruin your credit and lower it so that you got better loan terms. So I wanted to address that for sure because it's incorrect information and they're putting a spin on it. And honestly, that's just kind of what the news does these days. As you can tell, if you watch news ever, it's basically trying to turn everything political. It's trying to blow things out of proportion to create some fear and get some more views. And, you know, I'm just not a big fan of the news. I'm a fan of facts and looking into things. So if I hear something that doesn't quite sound right, I personally like to dig into it. And this being in my business and my industry as a real estate agent, obviously this is something that I know about and I wanted to dig and explain a little bit better. So we're going to start off. I'm going to go over this chart at some point, but let's start off with the actual news clips so that if you haven't seen them or if you have seen them, we'll just kind of address it together and take a look at what they had to say. So here's the first clip, which is coming from Fox Business.
7%. Mortgage rates spiking up to 6.43% yesterday as the Biden administration is planning to force homebuyers with good credit to pay more for their mortgages so that they can subsidize the loans of high-risk borrowers. Experts reportedly estimating that good credit buyers could pay about $40 additional a month on a $400,000 mortgage. The rule is set to go into effect on May 1st. Bob, it's subsidizing those homeowners who probably shouldn't have the mortgage in the first place.
Yeah, we've seen this before, haven't we?
Yeah.
When people were subsidized, whether it was autos, whether it's been homes, and then they default. And so it just comes back to bite you. But again, it's another subsidy to try and buy votes, right? And I don't know what good credit is. I mean, is it a FICO score that determines that? Is there a price level by which the buyer, as I was mentioned to you earlier?
Okay, so the first thing I want to address is, especially towards the end, he basically said, I don't know what good credit is. Is it a FICO score? Is it based on the sales price? So what I find about a lot of these news stories is they want to be quick and give an opinion on something, but they don't even necessarily take the time to understand what they're talking about. So in this case, you know, it's definitely credit score based and it depends on down payment. So there's some things that they could have added to that and just shown that they knew what they were talking about before they went on TV. And then the other thing, the rest of it, it wasn't terrible. I mean, they were kind of just saying that, hey, if you've got good credit, you're going to pay $40 more. And the people kind of indicating that the people that have poor credit are going to pay less, and that kind of alluding to the fact that the good credit is working against you in this case. But we're gonna talk about why that's not true. And you know, it's true to some degree, but not like that. We'll get into that. But I want to show a couple more clips before we dive into this chart too deep. So let's check out this next one.
Just to kind of echo your point, this is socialism for homeowners. We mentioned the student loan issue. Cab drivers who never went to college are subsidizing that student loan debt, right? And in this situation, this Biden administration, more and more often, they are making decisions to reward bad decisions. And that's not the way you grow as a country, as an economy. Essentially saying, hey, if you spent recklessly, you lived above your means, and you stopped making your payments on time, have no fear, someone who's done it the right way is going to pay for you. And that's not what capitalism is all about. Yeah. And it puts us in a situation where there's no consequences when you make bad decisions.
No.
My wife and I, we were paying, when we moved to Cleveland, Mark, back in the 70s, we were paying 18%.
Wow.
No one gave us anything.
Right.
We just struggled and worked our way through it.
Yeah, well, that's not what the administration wants. What is the market?
Okay, so this clip jumps straight into this is socialism, and again, kind of playing the political cards a little bit. You know, they talk about buying votes and this and that. So anyways, kind of breaking down the message, though, they're saying that there's no consequences if you have bad credit. You can stop making payments. You can, you know, fall behind on your bills, and then people with good credit are going to bail you out. So the problems I have with this are several, but, you know, if you don't make payments and your credit is bad, obviously there's consequences. And I guess I'll touch on this chart really quick just to explain. So let's say you've got let's say you're a bank, and let's say somebody with high credit who's shown that they're responsible, pay their bills on time, and manage their credit well. Would you look at them as less risky? Yes. Now, are you going to give them more favorable loan terms? Probably. Now, if somebody else comes in, wants the same type of loan, but they have a history of missing payments, paying late, maybe not paying at all, and just mismanaging their credit on a regular basis, then that, if I'm the bank, that seems more risky. So I'm going to charge them a little bit more because I'm going to take on some more risk as the bank. So that just makes sense, right? So, but again, they're kind of presenting it in a way that, oh, we're gonna give the people with bad credit better terms, and that's not the case. So if, let's say, for instance, if you've got a 740 credit score, you're going to get more favorable rates. Your interest rate's going to be lower. Your expenses are going to be lower. Let's say you've got a 640 credit score. You're higher risk. They're going to charge you a little bit more. They're going to tack on a premium on top of your interest rate because it is higher risk. And they still might give you the loan. But what they've done is to kind of sort of even the playing field a little bit more and try to get a few more buyers into the buying pool and try to help people out. They did reduce the discounts, I guess we'll say, or the lack of a premium for the higher end credit people. So that came down a little bit. It will cost them just a little bit more. They're estimating like $40 a month because of those adjustments. However, the people with bad credit, theirs did improve a little bit, but there's still a gap. So even though they made it a little bit easier for the people that have bad credit to qualify, a little bit less fees, maybe improve their chances of getting into a house, made it just slightly more expensive on the high side, there's still a gap here where it makes sense to have good credit, and it's beneficial to have good credit. So the way they're presenting that, I'm not a fan of, because most of the phone calls and stuff I'm getting or conversations, I'm like, hearing people say, well, I'll just tank my credit and then I'll get a better rate. And that's absolutely not the case, but it is the way they're presenting it. So, so definitely keep that in mind. If things don't make sense, and just because somebody's on TV saying something, just do a little bit of homework, ask some questions with, I mean, when I heard this, I thought it didn't make sense. I kind of knew better, but I also wanted to go talk to a couple lender friends I have and say, hey, what's the story with this? Can you explain it to me? I want to explain it to my clients. I've had clients contact me, say, what's this all about? And does this help me? Does it hurt me? And, as a professional, you want to know that stuff. So anyways, that's the gist of that. And then we've got a couple more clips that we'll get into, because Fox Business wasn't the only one. And I'm not picking on anybody as far as certain sides, politically, left or right. Everyone kind of does the same thing. When I see them, I want to share them.
Those in the market to buy a new home will soon find it pays off to have bad credit. A new rule raises rates for borrowers with good credit to subsidize lowering rates for high-risk borrowers. People with credit scores above 680 who put 20% down will pay the most.
This is a direct transfer of wealth and direct transfer of credit from those who have been responsible to those who have been less responsible.
Federal Housing Finance Agency Director Sandra Thompson says the changes, quote, advance their mission of facilitating equitable and sustainable access to home ownership. Former Obama housing chief David Stevens calling the move unprecedented.
We can do better programs to help more minorities get into home ownership. This is not the way to do it.
Stevens calculates that someone with a $400,000 loan at a 6% interest rate with a good credit score will end up paying $40 more per month. Now that adds up to $14,400 on a 30-year loan.
There really is some evidence that, at least at the margins, our attempts at the governmental level to get more people into homes as buyers really backfired on the way up to the global financial crisis. We have an interest in getting people into homes, sure, but we also have an interest in not having people take out mortgages or other loans they can't afford.
All right, so that news story started off right away with it pays to have bad credit. And that, again, is not the case. And they're misleading the public with that bad information there. And then they talk about, the guy at the end there talks about wanting to help people get into homes, but not the people that can't afford it. So this doesn't change the ability to qualify. For instance, if you don't pay your bills and you miss your payments all the time, you're still not going to qualify for a house. It's just they're not going to give you a loan. But if you do qualify for the loan under the guidelines, this tweak in the percentage might make it a little bit more budget friendly for them. So you're not even necessarily giving them a higher payment to something that they can't afford. If the bank runs the number, says you can afford it, and shows you the budget, really this whole subsidizing and leading to failure, like I get what he's saying, because we did go through a financial crisis before and a housing market crash, but that was based off of poor underwriting and loans being given to people who maybe shouldn't have qualified. And, that was more to like counting income that shouldn't have been counted, or not even verifying income. There's a whole bunch of reasons that happened. This is different. This is just adjusting the fees and the rates, that the premiums that they're charging, to make it a little bit more friendly, to help the people that are a little bit lower credit, maybe on the way up, and giving them an opportunity to maybe become homeowners. And what that's also doing is it's improving and increasing the size of the buyer pool, and hopefully helping stimulate the real estate market, because we are kind of stagnant right now in terms of, sellers aren't selling, the inventory is low. We'll get to that here in a second, but it's just a way. And the other thing they said was this is unprecedented. What the reality of it is, they make these adjustments all the time on the backside of the lending side of things. I've been assured that by several lenders now. And just for whatever reason, this news cycle, they decided to make a big deal about it. But they're always tweaking things based on economic conditions, the real estate market, whether they need to tighten things up, loosen them up. They're just trying to keep the economy and housing market flowing, because it's such an important piece of the puzzle as far as the economy goes. So anyways, I've got another clip we'll touch on, and we'll discuss all of this when it's over.
You're talking about.
Yeah.
So the affordability is at an all-time low, right? You have obviously higher mortgage rates, home prices are still elevated, and what you're seeing right now is you've got the real estate market basically at a standstill, because sellers, they don't want to lower their price because they know what their neighbor sold for 9 months ago, so they don't want to lower their price. Buyers don't have the buying power they used to have, so transactions aren't happening. You throw in the fact that existing home inventory is at an all-time low. And then we looked at recent data for building permits and housing starts. They're not building new homes either.
Yeah, that's right.
Permits are down, housing sales. I mean, this is a big part of our GDP. My experience at Home Depot, this is going to have devastating impact on the economy.
Because
further.
All right, now this guy kind of just touched on the housing market situation, which I actually agree with a lot of what he said. If you look at my weekly videos that I do, I talk about how the inventory levels have been dropping and low, which gives buyers less options to pick from when they are shopping. It does give sellers less competition when they're selling, so that's also kept the prices a little bit higher, because there just isn't enough inventory out there to pick from. But it's also keeping sellers from selling, because if they sell their property, where are they going to go if there's not many homes on the market? So just something's got to kind of help break up that logjam a little bit. And then from the buyer side, with the interest rates being a little bit higher, then that makes homes less affordable. The payments are higher. So now people are waiting to see, is the interest rate going to drop? I can't find the home that I really, really like because there's not much to pick from. So we got a lot of people kind of sitting on the fence. And what this program does is these adjustments that they're making by, lowering some of these fees. So these are the old fees up top versus the new fees down here at the bottom. So if they lower some of these fees, like a 639, these fees that they're adding to the loan are a little bit lower than they are up here. And if that brings a few more buyers into the market that maybe couldn't quite qualify before, now that might increase some activity. And then if that comes at a slight expense to the people with the higher scores, where you're looking at, they used to treat everybody the same, 740 or higher. They would just consider you the same. But now they broke it into 740, 760, 780. So now they just added some more categories. They factor in the amount of the down payment people are making, and then they calculate whatever premium they feel like is appropriate for that case, to keep the market moving, to allow a little bit more flexibility on the low side. But like I said, you're still getting, if everything else is equal, the high credit is getting better terms than the people with low credit. They've just helped narrow that gap a little bit, hopefully for the greater good. And if you look at the pros and cons of everything, because there are pros and cons with everything that comes out. So let's say you have high credit, but you're a seller. what if this program helps somebody with low credit now qualify and be able to purchase the home you're trying to sell? So it could still benefit you. With all these policies, it's always about, you know, playing the game and knowing the rules and what angles to play. Some of these you'll see with the different down payments. If you've got a good lender, they might talk to you about what amount of down payment might get you the best rate, and some creative ways to do this to offset things. So if you've got good credit and cash on hand, then you have flexibility to kind of play the game a little bit better. If you've got poor credit and little to no cash, then now you're kind of at the mercy at these bottom levels and what they're going to allow you to do. Down payment assistance programs, whatever, your options are just more limited. So I think with anything, education is the key. If this isn't like a magic fix for people that haven't been paying their bills and fell behind and ruined their credit. But if you learn how credit works, learn how to budget, start saving up some money, start paying off debts, then we can kind of help people turn from these lower credit scores and work their way up. So, but yeah, for the most part, the stuff that he said there, I agree with. Also agree with which is really a key point, how the housing market really drives the economy. The guy from Home Depot there mentioned that it has a trickle-down effect. If you're not buying and selling houses, you're not painting, you're not remodeling, you're not doing new floors, you're not buying new appliances, there might just be a lot of things that are tied to people moving, buying and selling, labor costs of, you know, people doing work, moving, you know, those are all jobs. So it's a big driver on the economy. And it makes sense that if the housing market kind of becomes stale and doesn't do a whole lot, it makes sense for the government or whoever to want to pick up that activity, because it is just good for the country in general and the economy. So I would expect them to continue to try to find ways to stimulate things a little bit. But yeah, I think it's being blown out of proportion. I think the message is getting lost and maybe encouraging people to do things that they shouldn't. So anyways, I've got great lenders. If anybody wants to talk about this in more detail, I know I'm just a real estate agent and I'm not really staying in my lane as far as going over this stuff, but I like to have an understanding of it. And like I said, I spoke with many lenders. For me to do my job properly, I need to know a little bit about everything. And but I do have great lenders if you need to talk to somebody about that. And as far as real estate goes, obviously I've got you covered there. I'm happy to help and answer any questions and put you in touch with anybody that I have connections with. So look forward to talking with you guys more. Reach out. Information's in the description. And thank you again. Like and subscribe if you like what you're seeing. And we'll talk to you again soon.